This is Piyush from Investor Relations team in Bangalore. I welcome you all to the Britannia earnings call to discuss the Q3FY18 financial results. Joining us today on this earnings call is our Managing Director, Mr. Varun Berry, CFO, Mr. N. Venkatraman, Head Marketing, Mr. Ali Harris, Vice President R&D and Quality, Mr. Sudhir Nima, Head Procurement, Mr. Manoj Balgi, and Vice President HR, Ritesh Rana, and Vice President Bread, Cake and Rusk and Adjacency, Mr. Jayant Kapre. Before I pass on to Mr. Varun Berry, I would like to remind you that anything which we say that refers to our outlook for the future is a forward-looking statement which must be read in conjunction with the risks and uncertainties that the company could face in the form of general economic conditions, commodities and currency fluctuations, competitive product and pricing pressures, industrial relations and regulatory developments. We will start the call with remarks on performance by Mr. Varun Berry. Subsequently, we will open up for the call for questions. I would now like to pass it on to Mr. Varun Berry for his comments.
Good afternoon, everybody. Happy to have you on the conference call today. So let me jump in and straight to the presentation. If you could move to page 2. One thing that we are really proud of is the consistency of performance over the years, and that for the team here is the greatest source of motivation. On the next page, it gives us a quick view on how the performance has been on the top line as well as on the profit front over the last 5 years. And again, something which motivates us to do better as we go forward. Now, getting to page 4, which I think is a very simple statement, but for us it's very, very deep. What really makes us tick is the focus on the basic execution which we do day after day after day, which really is the real reason for our underlying growth. Right? Now, getting to what are the execution areas that we focus on. Obviously, the core of it is to drive profitable growth, but we do that through, from a premiumization and innovation standpoint, increasing our distribution footprint, including gaining more share and getting a stronger foothold in our weak markets, attaining the cost leadership which we strive for every day, and leveraging our fixed costs and making sure that we make our P&L healthier and better every day. Now, moving to the first one, which is delightful innovation and activation of brands. The first and the most differentiated innovation that we did in Q3 was the Pure Magic Juice product, which has been in the market for now 1.5 to 2 months, and the initial response from consumers has been fantastic. So we are very proud of that product, and while we are trying to limit our distribution because it's a sensitive product and can melt, so we are doing it to a small set of outlets, but despite that, it's doing really well. We've also revamped our Good Day chocolate portfolio through chocolate chip as well as choco nut, both of which are great products and doing well in the marketplace. We've also had activation of brands. We've had a very good campaign behind Bourbon, NutriChoice, and one which is closest to my heart, and it's a good day to talk about. It's Valentine's Day, and this is Little Hearts, a little brand which has done really well through some activation on the digital platform. So besides that, we've obviously done a lot on Good Day, etc. But these are the new campaigns that I'm talking of here. Moving on to the next page, on our execution as far as sales and distribution is concerned, we've moved our direct reach now to almost 1.75 million outlets, which is 2.5 times what it was in the year 2013. Our rural surge also continues. We are growing our rural thrust, month after month after month, and that's very clear from that graph that you have in front of you. we've almost got now 13,600 rural distributors who are helping us distribute these products to smaller villages and smaller outlets. Our weak states continue to grow faster, and the thing is that there were questions on UP, and frankly, while UP we've been growing faster than the market, but it wasn't up to what we were expecting as a team, and now we've started to see UP also get close to a 20% growth. In the last quarter, we've seen almost 20% growth in UP, and the other states continue to do well. Rajasthan is top of the charts with almost 30% growth. MP as well as Gujarat are doing well, and which is giving us the required share in our weak areas. The third one is about accelerated cost efficiency programs. Happy to report that we'll end this year with a total cost saving of about 230 crores, which is 4.5 times what it used to be in 13-14. And the themes are pretty clear. It's at the bottom of this slide. Reducing distance to market, new and large factories. This actually is turning out to be the efficiencies that we've been able to garner through our new factories is giving us a lot of savings. We are deploying the right technology, which is giving us, cost leadership as far as those products are concerned. Reduction in wastage, which we strive for every day. And wastage is not just about market returns, which in any case is moving the right direction. It's wastage at every stage of our supply chain. And we've been, as a team, we've been able to do a great job as far as that is concerned. And then projects on value engineering. The next slide gives you, what we are doing from a technologically superior factory standpoint. So there are two greenfields which are going to be commercialized soon in the next month or so. One is in Guwahati, and the second is in the SEZ, which is Mundra in Gujarat, which is going to cater to our international business. And both are state-of-the-art, very good factories, which we are looking forward to commercializing soon. Next slide, which is slide 10. Frankly, I feel that a simple dream of a total foods company is very, very powerful. And, we can have a dream and not do too much about it, but I think we are moving pretty rapidly to fulfill that dream as well. If you were to look at the next slide, the first, which is our partnership with Chipita, where we are looking at launching filled croissants, is moving in the right direction. We've started to get the machinery. We've started to do the civil work in our new food park in Ranjangaon. And we hope that, in about 8 to 9 months, we would be in a position to commercialize and launch our product. Dairy, we've been speaking about dairy. Now we've started to do a pilot on milk collection, again, in Maharashtra, near the Ranjangaon area, and that's going quite well. If we get the right kind of scale and if we get the right kind of output that we desire, then we will move forward with our dairy project as well. The new geography, Nepal is, while it's a small country, I think there's tremendous potential, and we are really looking forward to putting up our plant there. The land has been acquired. All government requirements have been fulfilled. Now we are looking for the environmental clearance to go ahead and construct our factory. Usually in Nepal, it takes about a year to get the environmental clearance, but we are hoping that we should be able to get that through in the next 3 months and move forward and start a country operation in Nepal. The last but not least is the whole macro snacking area, where we are looking at very, very new and very differentiated offerings from our cake, and these new technologies are going to again come up in our Ranjangaon facility, and some new formats as well. And we are in the process of evaluating our right to succeed in some new categories within macro snacking, which we think are again moving in the right direction. but it will take a little bit of time before we are able to divulge where we are at there. The next slide gives you, just an idea of, our Ranjangaon facility, which is a very large facility, about 150 acres, and we are hoping that we will be able to not just make it our largest facility, but the highest technology, the lowest, human intervention kind of facility with products and capabilities which could be first to market. We are certainly looking at croissants, which is going to be first, very differentiated and, a new product for the Indian consumer. But even from a cake standpoint, there are going to be certain offerings which are going to be highly differentiated and first to the Indian consumer. We are also looking at putting up our dairy, facility there, which, while we will start with what we are already doing through milk collection, which will be done by us through 25,000 farmers, but it will also have new capabilities which could be new to the market, new to the Indian consumer. But that is, as I said, in the phase of validation from a milk collection standpoint. From a backward integration standpoint also, we are going to do, obviously I just spoke about milk collection from 25,000 farmers. We're also going to have a flour mill there and warehousing, raw material storage, etc., etc. Moving on to the next page, which is really saying that, while we are expanding and we are looking at, a whole lot of new stuff and really fulfilling our dream of becoming a total foods company, our true strength really is our people, and we are going to make sure that our people build capability and have the ability to build the kind of dream that we have. So three parts to that. First is building design and capability to propel the organizational growth, which I've already spoken about. So there are going to be new operational structures for the organization, and it has to be catering to a certain growth that we are looking at, and also for the adjacency, the businesses that the new businesses that we are trying to create. We brought in Jayant, who's now handling our bread, cake, Chipita JV, and Rusk business. We similarly, we're going to build a vertical which is dairy. We've recruited recently a very high-profile person for our dairy operations as well. So that's how we are building. Obviously, our first choice is to look at internal people, but for some of these high-profile jobs where we don't have the talent, we are mixing a little bit of outside talent with our existing, high-profile talent that we have in the company. From a functional standpoint, we are building capabilities in R&D, in manufacturing, because R&D, there is a lot happening in very, very different and very divergent directions. So we need to build that capability, and also in manufacturing, because now we are looking at a lot more plants, we're looking at different technologies, etc. The last point I've already spoken about, which is about acquiring key skills from the market and providing opportunity to the internal high potential employees to create the future of Britannia. The second vertical is about building a large food parks and building international expansion agenda, etc. For that, again, we need skill development. We need obviously internal talent to rise up to the occasion, and so we are doing that. Diversified skill sets we are building for the new geographies that we get into, functional capabilities, focus development, etc. And this is very exciting for our people. In fact, for Nepal, we've already got one of our current managers to become the country manager, who's started to work on that project. And it's a very exciting thing, because we were an India-centric company, And now we have got, opportunities for people who can handle the business end to end in these countries and, get their, roll up their sleeves and really understand what real business is. And the third is about sustaining and propelling the culture for our new business objectives. So we are building a lot of excitement and collaborative practices across functions to support the new vision and expansion by way of making sure that we create a appreciation culture. So we've got these awards now where we get our board to attend the award functions. These award functions, they sort of start with functional awards which happen every quarter, and then they roll up to a yearly award where the entire board is there to felicitate these winners, these high performers, vision and core values dissemination, and also a Leaders Connect calendar whereby, we get our leaders to connect with cross-functional managers wherever they travel to, etc. Getting on to page 15, now this is something which is again very close to our heart. If you look at the status in India, the National Family Health Survey, which is a body of the Ministry of Health and Family Welfare, they do a study which shows that the anemia among children and women is very, very high in India. And similarly, if you look at it, there is a 13% revenue growth in this quarter. And if you look at the progression, we've been growing throughout, and which is something that I feel good about. And if you were to go to Q3 of last year, which was the quarter where there was demonetization, but we even in that quarter had grown by 6%, while a lot of companies were flat or declining in that quarter. So this performance is over that 6% growth that we saw last year. Moving on to the next slide, which talks about inflation. So inflation has been almost flat this quarter. So flour, there has been a deflation. Sugar, there is a very slight inflation. RPO, there is a slight inflation, and milk, there is a deflation. On the balance, the commodities that we buy have been fairly stable. And as a result of that, if you were to go to page 22, our bottom line performance on operating profit has been reasonably good. So we are talking about 366 crores of consolidated operating profit, which is 14.3% of our revenue. And the progress that we started, 5 years back has continued to be there in the business. Right? Now, on the last slide, if you were to look at, the dashboard, so net sales has gone up by 13%. Profit from operations has gone up by 29%. Profit before tax has gone up by 25%. The drop thereby is only because of the treasury yields, and profit after tax has gone up by 20%. Again, there is a drop there because of the investment allowance that we had till 16-17, which was a 15% allowance on the investments made in plant and machinery. And also we'd put up a large R&D facility where we'd got a weighted deduction on tax, for that investment, which was 200% of our investment in R&D, right? So if you were to look at the table at the bottom, profit from operations, as I said on the last slide, is 14.3%. Profit before tax is 15.6%, and profit after tax is again a double digit at 10.3%. So that is all that I have. Happy to open the call to questions.
So we open it up for questions?
Yes.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. In order to ensure that the management is able to address questions from all the participants, we request the participants to please limit your questions up to two. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. The first question is from the line of Latika Chopra from JP Morgan. Please go ahead.
Yeah, hi everyone. I actually got cut off a few minutes ago. I'm not sure if you talked about this, but if you could comment on the category growth rates, over the past quarter for biscuits, and how have your market shares behaved, and also what, if any, specific change that you've seen in your product mix.
Yeah, so category growth rates, we haven't got it for the full quarter. They take a little bit of time. But yeah, whatever we've seen, there is certainly a ramp up as far as category growths are concerned. So I would say still category growths are in single digits and not moving to the double digit number. But I think there is an uptick as far as that is concerned. As far as our portfolio is concerned, we've certainly seen momentum in our, in the premium business. So the entire premium business has been growing reasonably well, and that's where our growths are coming from. But we've also seen a growth in the glucose segment, which is, certainly not in the premium category, but there is some growth there. And I think, this is all hypothesis, but my own feeling is that in categories where you have organized operators, there is growth. But in the value cookies and value cream segment, where we had a group of small players who were probably not playing by the rules, etc., there is no growth, because obviously there is some, as a result of GST, there is some shift happening from players who were not, playing by the rules, and players like Parle and ITC and us and Oreo who were playing by the rules. So I think that is also playing up. But for us, primarily the growths are in the premium segment.
This is helpful. Secondly, Varun, you mentioned in a media interview earlier this morning about, you plan to launch 50 new products over the next year or so. Could you elaborate a bit more on this? How much of this is going to be within the existing portfolio, and are you talking about a 12 to 18 month time frame here?
Yes, we are talking about the entire financial year. So we do this meeting where we have everything laid out, and we discuss what we are going to do this year. So I can tell you that the R&D and the marketing teams are really going to be busy. So watch out for this space. We are going to be churning out a lot of very, very innovative and very exciting products this year.
And does that mean it would imply higher brand investments from your side? And does that in any way influence the margin outlook?
No, I don't think so. These are not, completely new categories or anything like that. These are products that, some of them sit within the categories that we operate in. There are few which are outside the category, but no, there will not be any implications on the margins.
Sure. Thank you, and I'll get back in the queue. Thanks.
Thank you. The next question is from the line of Amnish Agarwal from Prabhudas Lilladher. Please go ahead.
Yeah, hi sir, a couple of questions from my side.
Excuse me, this is the operator. Mr. Agarwal may be requested to please speak closer to the phone.
Yeah. Hello, is it
Thank
audible?
you. Better, thank you.
Yeah. Okay, so I have a couple of questions. My first question is regarding the backward integration. On that slide, you have shown actually a few things like your flour dairy for bakery, milk collection, warehousing, etc. So can you throw a little bit more light on this backward integration program into these things?
So, well, backward integration means that, for dairy, we don't have a back end. Whatever products we sell in the market, they are all done through contract packers. This is the first time we are looking at, doing the back end ourselves. So that is the dairy part. Flour, we've never had a flour mill in our facility, but because the facility is so large, we are looking at, starting from wheat and grinding our own flour, which also gives us the ability to have different types of flour. For example, for the croissant business, we need a different type of flour. And for our biscuit business and rusk and cake and, all of these bread, they are all different types of flour. So, if we have this facility in-house, we'll be able to experiment. We'll be able to obviously cater to the requirements of the plant, but also be able to experiment and see how we can, do different types of flours and how we can sort of take our products as we get into newer categories to a different level. So that's as far as flour is concerned. Warehousing and raw material storage we do everywhere, so that's not a big one. But yeah, because it's such a large facility, it's going to be a very large raw material store and a very large warehouse.
Okay, sir, you also talked about, say, the efficiency gains, okay,
Yes.
which are targeted at around 230 crores in the current year. So, do you have any target for FY19 for the same?
We are in the process of formulating that, but certainly it will be higher than what we've done this year.
Okay. And sir, finally, just one question. You have also stated about the growth rates in some of these states where we have been, our share is less, like your UP, Rajasthan, etc. Now, these are the four large states where we have grown much ahead of what our growth is. So, excluding these 4-5 states, what could be the growth rate for Britannia?
It's not a big difference. We have a very small share in these states. It doesn't make so much of a difference to our overall growth.
Okay, but sir, how much these states could be as a part of the total industry size for biscuits in India?
Industry size will be large, but our size will be small.
Okay, sir. Thanks a lot.
Thanks.
Thank you. The next question is from the line of Sameer Gupta from India Infoline. Please go ahead.
Hi, sir. My question is on the relative market shares post GST. Earlier, you had mentioned that GST could be an opportunity to take market share from small and unorganized players, and now it's been 6 months after the implementation. So just wanted your sort of revised views or outlook on what you think about this issue now.
No, so it's still too early to comment on that, but I do think that there is some shift happening, not just for us, but for other organized players as well. But, one is that, but second is, as far as our market share is concerned, we've been moving in the right direction. So that keeps us, satisfied with what we are doing.
And your market share growth is coming mainly at the cost of the number 2 or number 3 players, or is it coming more at the cost of the smaller players?
No, it's coming from both. It's from both.
I see. Sir, second question is on input costs and margins overall. You said that input costs have been stable. So in this scenario, just wanted to understand, I mean, given that there is, of course, some amount of pricing power and normal price increases that you will take vis-a-vis the input costs and your innovation pipeline all put together. I mean, you mentioned to a previous question that there will not be any pressure on the margins, but investors and analysts are used to seeing continuously expanding margins for Britannia. So can we see that trend continuing, or are you guiding towards stable margins on a YY basis for FY19?
No, I would say that, first of all, we don't give any outlook, but the fact is that, when we don't have input cost related inflation, then we don't take pricing as well. because it's not just us, it's the industry which responds to a certain stimulus which is there in the market. And obviously with the GST happening, there has been no price increase at all in this duration. And I don't see that happening unless it's necessary, at least in the next 3 months or so.
Right. And the implications on the overall margins of these moving parts, sir?
You are seeing that, no? You are seeing the implications in our financial results.
Right. Understood. And one last one, if I might squeeze in, sir, what is the outlook on the overall sort of demand scenario, especially in rural? I mean, last 2-3 years, each time, not only you, but I mean all the companies, investors, analysts, everyone has been hopeful of a pickup. But every year has sort of disappointed and sometimes even deteriorated versus the previous year. So, do you really see signs of pickup in the next 2-3 quarters, or at this point of time it's a statement of hope only?
No, I hope that we see a pickup in the next few quarters. Okay.
Okay, sir. Okay. Thanks, and all the best, sir.
Bye.
Thank you. Reminder to all the participants, if you wish to ask a question, you may press star and 1 on your touchtone telephone. The next question is from the line of Alok Shah from Edelweiss Securities. Please go ahead.
Yeah, hi sir, this is Abnish here. So we got disconnected, so I don't know if I'm repeating any question. First question, sir, is on Parle. We are seeing a very aggressive advertising by Parle. They have announced doubling of sales in the next 5 years, which means 15% CAGR. And sir, Platina, they are again very aggressively doing the overall visibility. So on the premium and especially and overall, are you seeing more pressure from Parle? I know last 1 year you have gained market share, but going ahead, how is the scene with respect to Parle?
No, so Parle is a great company. I have great respect for that company, and they've been doing well, I would say. They've been getting things right slowly, steadily. Actually, but the biggest thing which has helped them this year probably is the growth in the glucose segment. I don't think there's much movement in the premium segment. While they've done a lot, the whole creation of the Platina and all of that has come into the market, but there's no pressure from that. Their growths are coming from a segment that we are very, very small in. And I don't think there's too much of pressure as far as the premium end is concerned.
And sir, one follow-up here, you have done well in the weak states and where Parle is very strong. So when glucose comes back, does it mean that going ahead there could be some issue in these 4 states? You have done well, so I'm not questioning your current performance. But why is glucose coming back? Is it because of down trading? And does it mean that these 4 states, the growth could come under pressure?
No, so we are not using glucose to be the driver of our growth there. We are using some of our premium brands in the 5 and 10 rupee portfolio to be the driver of our growth. Glucose also contributes. I'm not saying that glucose doesn't contribute, but that's not the driver. That's not the sole driver of the growth. And I just answered that question about why I see glucose coming back. I think my hypothesis is that because Parle owns that market with a 75% share, and they are organized players who play by the rules of the country. They obviously are benefiting from some of the other non-organized players who don't play by the rules in the value cookies and value cream segment. So there is some migration of those consumers happening to the glucose segment. That's my hypothesis. We haven't done any research on this, so I don't know, but we'll know soon enough because we are looking at conducting some kind of research on this as well.
But does it mean you will reevaluate your glucose strategy? You are doing the study and definitely GST will help.
I think we should meet and discuss because on this call it might be very difficult to answer all the questions. So, but we are very clear. We have our core strategy outlined. while glucose will play a role in our portfolio, we are not looking to be market leaders in that segment.
The last question, Nepal, you already would have some presence there, right? Because it's a very adjacent market. So what's the current standing there, and where do you see next 3 years in terms of, say, market share?
We have about a 18% share there, and we hope to see that share go to a much larger number as we go forward.
And number 1 will be Parle again there?
Yes.
And you will be number 2 currently?
Yeah.
Okay. Okay, sir. That's all from my side. Thank you, sir.
Thank you. The next question is from the line of Pulkit Singhal from Motilal Oswal. Please go ahead.
Yeah, hi. Thanks for taking my question, and sorry if it's repeated. We got cut off from the line. So 2 questions. Firstly, on the dairy part, I mean, we're reading one of the news articles which talks about this 400 crore business going to 1,500 crores in 5 years, and potential to be as big as biscuits, etc. So, what are the kind of I mean, because our perception is that it's a very low margin and a mediocre ROC kind of business. So, your opinion firstly on that, and secondly, it also talks about you're looking for some kind of joint venture partner. So, if you can just highlight your strategy there.
Yeah, no, so first of all, we are in the experiment to do the milk collection and understand that business and, dirty our hands and figure out what needs to be done in which way, etc. Once that is done, we will, obviously there's a lot of homework that has been done on which way to take this business. We are not looking at, if you look at the current dairy business, I think the bulk of that business sits in liquid milk, and we are not going that way. We are looking at only value-added products, which even in the Indian context are, decent margin products. And, obviously the health connotations of the dairy segment are fairly good. So I think we can create a very exciting portfolio of premium products with innovation and with reasonable margins. And we are looking forward to creating that. But I think we are a little distance away from that. Now, as far as joint ventures are concerned, we are not, we haven't finalized anything yet. But, certain segments where we don't have the know-how, and if we think that it's going to take us time to get to that know-how, and there is a global company which is in a position to partner with us and take us where we want to go, then we'll be very happy to do a partnership with them.
All right. So, and secondly, on the raw material side, so this quarter, would it have been an overall deflation or still an inflation or flattish on an overall basis? Flat. So when you mentioned about the dynamics that, you don't tend to take price increases, but I mean, is the industry dynamic such that if there's a deflation, there's no price cut as well, while when there's an inflation, there's price increase?
So you saw that 2 years back, when there was a deflation, there were some price cuts. So, it's not a hard and fast rule, but this year has been peculiar because of the GST implementation and all of that. It wasn't fair. First of all, there was no inflation. Second, GST was being implemented. So I think it was not fair to take any price increases, and I think most of the FMCG companies complied with that. And certain companies which got benefits, they even cut their prices. So I think that's how it should be in a situation where the FMCG growths have not been what they used to be 5 years back. And we are hoping that with all that, the FMCG industry is done, hopefully as we go forward, we are seeing a little bit of a trailer of that in this quarter where the growths are looking good. We are hoping that we'll be able to continue with these category growths, and hence, everyone will live happily ever after.
All right. So lastly,
excuse me, this is the operator. Mr. Singhal, may we request you to rejoin the queue, please, for follow-ups?
Just one last data point. So the 15 new launches or whatever that we talked about, to put that in context, how many would have been this year?
All of them will be this year.
No, I mean in FY18, how many would you have kind of done?
Oh, there'll be about 15 or 16.
Okay. Thank you.
Thank you. The next question is from the line of Nandan Vartak from Wealth Managers. Please go ahead.
Good afternoon, sir. So I just
Excuse me, this is the operator. Mr. Vartak, can you speak closer to the phone? You're not audible.
Hello.
Yeah.
Yeah. Good afternoon, sir. I just wanted to know the sales mix between premium segment biscuit and value segment.
Sorry?
Sales mix between premium segment biscuit and value segment.
So for us, it's 75 premium and 25 value. But industry is 55-45.
Okay. And the second question was regarding SKUs. So what number of SKUs we offer currently, and what would be number 3 years back?
We used to have in the bakery segment alone, we used to have almost 300 SKUs. Now we are at about 180.
Now we are at 180. Oh.
Yeah.
Thank you. Thank you.
Thank you. Reminder to all the participants, if you wish to ask a question, you may press star and 1 on your touchtone telephone. The next question is from the line of Bhavesh from CLSA. Please go ahead.
Yeah, hi, good evening, everyone. Sir, can you just give a broad split, of the biscuits in terms of plain, cookies, cream, etc., from the industry perspective as well as from Britannia's perspective?
No, I just gave it, no? So industry is 45 value, 45% of the total biscuit category is value, and for us it's less than 25%.
And in terms of cookies and cream, if you see in terms of say
value is everything. So you're saying cookies and cream where? Value or premium?
In value. Sorry, in premium.
It will be 1/3, 1/3, 1/3 almost. So cookies, cream, and glucose will be 1/3, 1/3, 1/3.
Okay. And secondly, sir, it looks like now in dairy you are clearly moving ahead with your plans, with almost like a full-fledged, foray in the dairy sector. So any revision in the capex guidance or any thoughts on that?
No, so once we are completely ready with it, with all our experimentation over, we will discuss that, and we will tell you how much we are investing. I would say this experimentation should get over in the next 2 to 3 months, and after that we will finalize all the numbers and discuss.
Okay, great, sir. Thank you very much.
Thanks.
Thank you. Reminder to all the participants, if you wish to ask a question, you may press star and 1 on your touchtone telephone. Participants, if you have a question, you may press star and 1. The next question is from the line of Jitin Doshi from Enam Asset Management. Please go ahead.
Yeah, my question pertains to the treasury management. What is the cash and cash equivalents that we hold as of 31st December?
It's roughly about 1,800 crores.
Right, and how much of that is gone for ICDs to group companies?
Group company ICD as of December is 410.
410 crores. And what is the yield on that?
Yield was the number which was there. So March was 450 crore. That's come down to 410.
So what is the yield roughly of that investment?
Yield is a little over 10%.
Little over 10%. So so what would be your post-tax yield out there?
Post-tax will be about 30% of that.
Okay, so what's between 6.5% to 7%?
That's right.
Okay. And secondly, what would be your total capex between 19 and 20, the next 2 years, since you are putting up so many plants?
Current year capex is likely to be about 400 crores.
Right.
Which is the year that goes on?
17-18.
17-18.
Okay, so in 17-18 you will be doing a cash capex of 400 crores. Right. And one last question is, I think you are completing a landmark 100 years this year. So would there be an extra you would be looking with so much of cash at any extra payout or something this year?
I will not be able to comment on that. That's the prerogative of the board.
Right.
So once the board decides, we will let you know.
But Varun, how much is the real cash do we need on the balance sheets? Would you say about 500-700 crores at best?
Yeah. So if you look at our Ranjangaon facility, we are committed to investing 1,000 crores, and we
over what time?
Sorry, over the next 2.5 years or so.
Right.
Which includes all our facilities and everything that we do, including dairy.
Okay.
So that is going to be the big part of our capex in the next 2.5 years.
Okay, and you are generating roughly about 1,000 crores a year.
No, we are not generating 1,000. We are generating about 400 to 500.
You're minusing the dividend payout, or?
If you minus the dividend, it will be even less.
No, because you're doing a PAT of 1,000 crores, about 850 crores or so.
There's a capex, and then there is a dividend.
Okay, so you're saying minus capex and minus dividend. No, I was just referring to the whole thing as without the dividend. So that's or without the capex. So that's the free cash less capex and dividend. So roughly your needs of the year are always taken care for by your cash flow, right?
Right.
Yes.
Right. So you're and do you have any acquisition plans on card with this extra cash that you're holding?
So we are looking at possibilities, but it's not it's not like we've got anything which is ready right now.
Okay, and it would be all in the snacking area.
If something good comes up, it's we are open to that, but the valuations in India are sky high. So
Absolutely. Because
we're not going to do anything which is knee jerk.
Okay, so I would say that biscuits and dairy is going to be an organic growth issue, and rest of it you can go in for acquisitions, right?
Right.
Okay. Thank you so much, and wish you all the best, and congratulations for a wonderful set of results.
Thank you.
Thank you. Reminder to all the participants, if you wish to ask a question, you may press star and one on your touchtone telephone. The next question is from the line of Amish Kanani from GM Financial. Please go ahead.
Yeah, hi, sir. Sir, the off late the government has been talking quite a bit on the value addition of agro processing and stuff like that, and the food park policies are also been announced. In that context, I was wondering whether the capex that we are doing are we benefiting through any of these initiatives, and or are there any fiscal benefits, and or are we putting up in these food parks? That is question number one. And also this MSP for Kharif crop being announced, which might result in some food inflation in the second half of next year. Are our products in any way getting impacted because of that? And are we seeing any inflation because of that on our raw material basket?
Yeah. On the incentives question for the Ranjangaon facility, we have already applied for a fiscal incentive from the state government. In the final stage, we are hoping that it gets completed, closed in the next 1 or 2 months' time.
Okay.
Right. It's in various stages of discussion. So that is one. And second, from the central government incentive point also, we have filed our application.
Okay.
But the big benefit is going to be from the state government, and hopefully, we will get the benefits that they give for mega projects. So we are looking forward to that. And on your commodity and MSP question, I've got Manoj here. Manoj is head of procurement, so I'll let him answer that.
So the MSP, there is a little bit of confusion of which method for calculating MSP would be used. So once that is clear, we will be able to comment on the impact of that going forward.
Okay. And sir, is it possible to give some color of what kind of these mega projects benefits are generally being discussed? Maybe we may not be able to discuss our plant specific and stuff like that, which may not be finalized. But generally, what are the kind of benefits that are coming, sir?
No, these are custom made. Mega projects are custom made.
Okay. Okay, so maybe once we are finalizing or we get...
Yeah.
Okay,
Thank
thanks
you.
a lot, and all the best, sir.
Thank you. The next question is a follow-up from the line of Alok Shah from Edelweiss Securities. Please go ahead.
Yes, sir. Most of the questions have been answered. Recently, there was a news flow that on the kids channel, the snacks ads may be stopped. Although as of now, it doesn't seem to be happening. Supposing it happens, is there some impact, likely impact on will your products also be classified in the junk category?
No, as of now, we are not in that category at all. We are baked products, and we are certainly healthier than all the snack products that are available. So no, for starters, we will not be in that category for sure.
And so on your recent new innovation, Pure Magic Dews, you mentioned something on the melting issue. So are you restricting this to largely the inside of the shop and maybe even refrigerated? Is that the requirement in terms of distribution?
Yeah, so we are looking at, we're making sure that we don't get to a situation where the salespeople are distributing it to every possible outlet. So we've restricted the number of outlets that are, let's say, air conditioned or have some refrigeration capability, etc. And we obviously, this is the first time that we are doing a product like this. The chocolate companies have been doing it for donkey's years. And if you study what they do, they sort of, they bring their distribution down during the summer and again ramp it up. We don't want to do it. We just want to make sure that we contain it. We keep the distribution in a certain number of outlets and go through the year and see, what are the results. And thereafter take a call on how we are going to follow the chocolate distribution formula.
But in terms of product technology, without using trans fats, that's not possible, right?
So we don't use any trans fat in any of the products which we manufacture. So this is a very special chocolate what we are using in this product use.
No, I know you don't use trans fat. My question is, without in terms of product technology, you can't do much, right? That was my question. I know you don't use trans fat. You can't make it to more shops on a regular basis, right?
Well, it's a fine balance between having the right kind of chocolate and having a melting property of the chocolate activated. So you can put you can put stuff which will make the chocolate not melt, but then you will not get that same organoleptic effect, because even when you take a bite of the chocolate in your mouth, even in your mouth, which is, let's say, 36, 37 degrees centigrade, the chocolate will not melt and you will not get that feeling of, a melting of chocolate in the mouth. So it's a very fine balance and we have to make sure that we do that. So our R&D team has done a fantastic job of balancing it in the right way.
The last question, how is bread done? Last quarter it was double digit?
It continues at double digit.
Okay, sir. That's all from my side. Thank you.
Thank you, ladies and gentlemen. This was the last question for today. I now like to